Hello everybody, welcome back. What we're seeing over the last week or so certainly is a very interesting trend for the markets. Despite a pretty bleak month over the past 30 or so days, with main US indexes dropping significantly, the past 5 days has shown us some promise. We're actually seeing some significant growth. 2% over the past 5 days, with the majority of that coming from today. You're going to see a gain of near enough 2% today alone, with a lot of people now questioning what the future is. Is this potentially the bottom of the small dip that we've seen, or is it time to zoom out to the year chart, the 5-year chart maybe, and look at this massive growth? You see, this is the thing. This is where the questions come in, and of course nobody can say for sure, nobody has a crystal ball. But what we can do is look at the facts, look at the news, and make our own opinions. Of course, do your own research, but there's some important information I'd like to share with you today. One of the biggest things that I keep seeing is how many people believe that the markets are still overvalued. We're seeing that 90% nearly of fund managers say that US stocks are overvalued, the most who are saying this since 2001. And this came out only on the 18th of February 2025. Yes, markets have dipped a bit since, but not very much. And again, they're comparing this to April of 2001. We know what happened then, but we'll get into that in a second. So, what are we looking at here? Well, apparently, a record number of fund managers see US stocks as being overpriced, according to the Bank of America's February Global Fund Manager Survey. This survey included 205 panelists managing nearly about 482 billion in assets. So clearly, people who kind of know what they're doing have a lot of money under their belts, and they are saying at a rate of 89% that they believe that the US stocks are overvalued, the highest level who believe this since 2001. And of course, that is around about the time of the dot-com bubble. So despite the sharp increase in sentiment, Bank of America strategist Michael Harnett points out that an average of 81% of fund managers have considered US equities as being overvalued throughout the 2020s. So not necessarily that this is a particularly major point, but the thing is, it actually is. Because it's not just fund managers that believe this. This is perhaps a good indication of what broader markets are doing. But again, when you zoom out to the past 6 years or so, the past 5 years, you do see this massive melting upwards, especially since 2023. This all comes at a time where we're seeing data regarding layoffs, right? So many companies laying off staff due to costs. So many companies also announcing that they are nervous about where the markets are going. Bear in mind, guys, we've made videos on this already, right? You can go back and watch them. We've spoken about car makers, aviation businesses, and all different sorts of firms who are nervous. They're nervous about tariffs, they're nervous about the broader economic decline that we could be facing soon anyway. And again, these are perhaps indications that the market may not be as good as everybody might want to believe. It carries on though, as we are seeing news coming out from the Big Short. The investor who predicted the 2008 crash warns the market that is underestimating the economic impact of Doge's mass spending cuts. And this is significant in itself again. Bear in mind, a lot of people have been predicting a market crash. Not necessarily that big of a deal. But when a lot of people are saying something, we should at least have a question as to why they believe it. And what we're seeing here is that the Big Short investor, Danny Moses, said that the Department of Government efficiency cuts have jeopardized private contractors, small businesses, and the labour market. It's not as simple as just, we think there's fraud, let's cut waste and expenses, he said. That is true, right? It's not necessarily a very, very simple operation as it is being marketed. It is more complicated than that. He says that he thinks that they're underestimating the impact to the economy of the cuts that they're making at the federal government. And what that might mean for the knock-on effects into the economy. And this is quite significant, right? This is quite significant. It's quite true as well. I think a lot of these cuts, when we look into the details of them, may not actually be as efficient as they are marketed as. We're seeing not that much money being saved. We're seeing not that much of an impact financially. Just a lot of people losing their jobs. And again, not all of the waste appears to be being resolved. But that's perhaps a different point. He is very concerned. He said that they're hurting the revenue side of the equation. He thinks that they're headed for an overly optimistic as to how this is going to play out. So, The Trump administration has fired more than 24,000 federal workers. This is true. An additional 75,000 employees took deferred resignation, an opportunity which allowed them to receive pay and benefits through September. So many people losing their jobs, so many investors concerned about where the market is right, and we're seeing so many issues with so many businesses. We are in a really interesting time in the markets. And as well, all of this comes at a time where we are seeing US consumer sentiment tumbling as long-term inflation expectations hit a 32-year high. People either don't have the money to spend, they feel like they want to have the money to save in case things go bad, or simply they're that destitute at the end of the month or so when the bills have gone out and when all of the costs are accounted for, that they just don't have the money to spend on luxury. So many industries are feeling this. We've spoken about how airlines are being impacted. So many different businesses are feeling the knock-on effects of the economy and the economic situation right now. Bringing this back to the broader situation, how long can companies keep posting record profits? How long can companies keep posting record growth? So many companies are cutting back to save on costs. The question is, when does this start to impact share prices? And again, you zoom out to that chart going back to 2000, 2001, we zoom out all the way and we look at where we are right now. This is a large run up. Since 2008, we are up significantly. And of course, there has been a lot of economic changes. It's a very different market to what it was then. But even since 2020, 2021, this is a very significant high in the market, and a lot of people believe it could be near the top. Let me know your thoughts in the comment section, guys. I do want to hear them, so thank you, and I hope I'll see you soon.